The house they forgot to report. Welcome to Automatic Tax Returns. The content on this channel, Automatic Tax Returns, is for educational purposes only and does not constitute tax, legal, or financial advice. Please consult a licensed tax professional before making any decisions related to your personal situation. If you are new here, make sure to hit that follow button. This is the story of Mark and Olivia, a married couple who thought they had done everything right. After 10 years in their cozy Maryland home, they sold it for a tidy profit, nearly $420,000. They paid off their mortgage, packed their boxes, and moved to North Carolina to start over. It came 11 months later. A plain white envelope stamped Department of the Treasury. Olivia thought it was junk mail until she saw her name in bold at the top of the notice. We have information that you sold a property in 2023. The sale was not reported on your tax return. The IRS claimed they owed $56,000 in taxes, penalties, and interest. Her hands trembled as she read the next line. This amount is due immediately to avoid further collection actions. She screamed for Mark. He came running from the garage, still smelling of motor oil. "What did we do wrong?" he asked. But by then, it was too late. The title company had, in fact, issued a Form 1099-S. When Mark and Olivia filed their taxes by their tax preparer, there was no mention on the home sale because they knew that their home sale was non-taxable because the profit is less than $500,000. To the IRS, this looked like they had sold a home and hidden the income. And when the IRS computer, known as the Automated Underreporter System, matched their tax file against reported forms, the system flagged their names. Have you ever been flagged? Drop your answer in the comments and don't forget to subscribe for tips and real IRS horror stories. Weeks later, a certified letter demanded proof of the home sale, basis, and exclusion qualification. They were told they had 30 days to respond or risk levies and liens. Mark dug through boxes of old papers, searching for receipts, settlement statements, and anything that could prove their profit was excluded. He found water bills, but no proof of home improvements. Their real estate agent had retired. The title company had merged with another business. Documents were lost in the shuffle. Months later, the IRS agreed to reduce their amount, but not by much. Without proper documentation, their $220,000 of gain was considered taxable. They ended up paying over $40,000, draining the savings they had set aside for their new house. The refund they expected that year was seized. Their credit report showed an IRS lien for the remaining balance. It took them nearly 2 years to dig out. What should have been done? First of all, the couple should have documents indicating the purchase price of the house and the sale price of that house. Since the couple received a Form 1099-S, they should have reported the sale by using a Form 8949 and a Schedule D. With the documents and the IRS forms, clearly the home sale profit would have been excluded under Section 121 and that the couple would not be suspected of hiding income. This was the house they forgot to report, brought to you by Automatic Tax Returns. If this story opened your eyes, hit like and hit follow or subscribe button. If you need a federal tax return, try the application in the description. It calculates, downloads all applicable federal tax forms, fills in the numbers and relevant information to respective tax forms, and merges all the form to a complete print-ready federal tax return that is needed to be filed. Simply input numbers, information that apply to you, and select one of 3 options, which are Form 1040 for W-2 taxpayers, Schedule C for business owners and sole proprietors, or a Form 1120 for corporations. That is it. It takes less than a minute or two to generate all completed merged federal tax forms into a completed portable document format. Federal tax return will open to be printed. Print, sign, and mail or upload online.